9/16/2020 to all of our friends around the world and all of our options traders. That's what we do. Premier educational services, making money along the way. S&P 500 had a little problem with the FOMC announcement. Let it be clear that we're still below the 20-day simple moving average, which is resistance up here, right at that 3430 reversal that we had today. Let it be known. Now, the problem is that the 10-day simple moving average, that beige line, has been slightly violated, and it has. And we closed down toward the lows of the day, which means it was closing at the lower price points. Once again, we will feature the 50-day simple moving average right here, as you can see there, all of my friends. And let us not forget that the daily sell signal today is still minus 17. And I can say that we have to get a close above the 20-day and the 10-day moving average, and we would have to consolidate above it to say that we were going to get back up here and go higher in this S&P. And that's the way it is. The volatility for September and the election is what it is. And generally in these cases, everybody, after you sell down on an FOMC meeting, and it was during that 45 minutes, there was 45 minutes there, and then that started to drop off, and it dropped off. And then as we broke the 10-day moving average on the S&P there, right around 3,400 or so, then we went down, and we're testing this area. Now, when we take a look at things like this on a weekly level, on the S&P, we're right here at where, when we had that gap down in that original sell-off, this beige line is a 10-week moving average, and we did, and we popped up, and we're below 33.91.81, which is this trend line right here, right now on the weekly. And there's not a weekly sell signal on the S&P, other than the S&P is going to be clinging to the 10-week moving average. If we go below it, then we go a lot lower. And we could trade on down to, let's say, the really good support level down in here is going to be right over here where the gap up was. And that day there was on 8/3, yeah, back. And that wonderful dog days of August that had just started, and that's something on the weekly here. This is the weekly chart. Okay, and then we made the highs when it got all bloated. And now we're here testing that 10-week here, and that's the bounce. And the bounce is that 10-week moving average, I'm saying to everyone right at this moment, if we break that, and the 10-week MACD goes higher, then we're going to sell down. And, you know, it can get, the deeper they sell it, if we break through the key support level, then that's when the selling will increase. Okay? If we hold it like we have so far this week, and today is Wednesday, so we do know, everyone, that resistance is always going to be at the low right there where it hit it, and it didn't keep going above that 34.30, and we traded that today. So on the put side, the 34.30 puts, yeah, we did. And that is the wall of resistance to the upside for the bulls anyway. And for the bears, now, you don't really get any real big traction unless you break that 10-week moving average and break these support levels. Then we go a lot lower. Be aware, everybody, with the volatility. Let it be known.